Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're actually going to do our first collaboration video with Steve from CryptoCrewUniversity.com. Steve is someone who I used to follow when I was in graduate school, and he actually inspired me to start my own YouTube channel. So it's an honor to have you on, Steve. Steve sticks to the data like we do, so he provides insights into Bitcoin looking at the data. So this is someone I would recommend you guys following. Steve, it's an honor to have you here. Thanks for coming on the show.
It's an honor to be here, Ben. Um, I can't wait. I can't wait. Ben is somebody that I think has done a tremendous job in the space. We've called him underrated for a long time, but I think Ben is taking over. So it's an honor to be here. I'm super excited.
Yeah, it's great to have you. It feels really awesome to have you on the channel, especially since you were the inspiration to start my own channel about a year and a half ago, and it's really crazy how quickly things can change. But anyways, on your show, you have a lot of different indicators, and you look at data in a slightly different way than I do on my channel. And so one of the things we like to discuss on my channel is that, and this is something that in grad school we would always say is all models are wrong, but of course some are useful. And there's not any specific model which will give you the entire picture, but by looking at a lot of different models, we can start to develop conclusions about things and get a better idea, a better understanding of where the market is headed. So I understand you have a lot of indicators you use. How do you use these indicators to maintain being calm in markets like this where you can have such major moves any given day of the week? So hopefully you can enlighten us on some of the things that you use.
Sure. So I think the main thing is in markets such as crypto, where, like Ben said, it's so volatile. The main thing is if you have less than a few years trading experience, I think you should really never look at the news and only look at the facts in the charts. And there's different ways to look at the facts in the charts, but I think in the big picture, one of the first things I would say is don't look at the day to day. Try to look at the bigger market cycles. For example, if we're just looking at the chart here, everyone is either going to make all their money or lose all their money on this large cycle. And if you're looking at the day to day and reacting heavily in one way or the other, you will miss out on this major cycle. The next place to lose all your money or make all your money is this next cycle. And these cycles in crypto happen every few months, not every few days. So I think it's an overreaction generally in the markets. But if you're overreacting, you're gonna get caught in turmoil. So what we try to do on our channel is just to keep everybody calm, keep everybody level-headed. We take a few steps back, we look at the big picture, and then things start to become a little bit clear. So we use things which we'll talk about here. The first one is the pi cycle. So if you're not familiar with the pi cycle, it's super accurate in terms of predicting market tops, meaning if we're in a 4-year cycle, right? The question that a lot of people are starting to ask is this the market top? And we can't say with certainty, right? We can say with a probability that it's not yet, just based on the fact that this orange line hasn't crossed above the red line. And if you look over here, we've got the 111-day moving average, right? And then there's the 2x multiple of the 350 moving average. And in a nutshell, if that doesn't make sense to you, you just look for the orange line to cross above the red line. And when it does, it's done that within about 3 days accuracy of the top. So this is the 20K top. You can see that orange line crossed above. And when we go back in time to the other two market tops, it was accurate within plus or minus 3 days. So just using things like this to say, oh my God, Bitcoin is crashing. Is this the top? The house is on fire. Should we panic? the big picture is like, no, actually, we're getting ready for our super cycle. So what we believe is if you look at just the facts in the charts, we've just recently moved above the red line. Everybody can agree with that, right? Looking at this chart, we've just recently moved above the red line. Where have we done that looking left? And that's something we talk about a lot is in the charts, men lie, women lie, the charts don't lie. And when you look left, you say, okay, when was the first time that we crossed above the red line before? Okay, here, back in June 2017. So over the past 5 or 6 weeks, we've really been eyeing this fractal pattern and trying to identify like, hey, is this the fractal pattern that we're in, where we first move above the red line and then we have some trouble. We come back, we hold it as support, then we actually break down through towards the orange line. And that's something that we started to break down, over the past 5 or 6 weeks. And we can take a look at the next chart, which is the same concept of where we are here. So we'll get into that in a moment. But I just want to break this one down a second more. So if we are in this fractal pattern, I'll just point out something pretty cool. So we can see that, and this is on the daily chart, right? Mm-hmm. We can see that we've had this type of formation, right? And a lot of people will call this a symmetrical triangle. And I'll say there's two ways to know if it's a symmetrical triangle or a pennant. A lot of those are confused, right? Because pennants and symmetrical triangles have this formation where it's like you have a high, a lower high, a lower high, and then you have a low, a higher low, a higher low. Both of those can be true for pennants and symmetrical triangles. So what differentiates the two? Number one, time. Pennants usually last for weeks, and symmetrical triangles last for months. We know that this move has lasted for weeks, so that's 1 point for the pennant. The other thing that determines whether it's a pennant or a symmetrical triangle is the pole. So you can see that we have a pole here, right? Mm-hmm. And then when you start to break it down, it gets pretty interesting because you go back to this fractal pattern that we have been following for a little while. You can see that before we broke down, we were in a similar formation, right? Where we had our high, our lower high, our lower high. And then at the same time, we had our low, a higher low, a higher low. And with these symmetrical triangles in pennants, you want two conformations, right? So you want two lower highs and two higher lows. And we broke down through here at that breaking point of the symmetrical triangle, which is interesting because, the pennant, because this was actually a pennant as well. And pennants by nature are supposed to be continuation patterns. They're supposed to break to the upside. But again, nothing is definite in trading. You can't say with 100% certainty this is always going to break to one side or the other. We can base it on probability and statistics. So it's interesting that as this develops, it's really playing out with that fractal pattern so far. And then the story becomes, well, are we really going to drop all the way down to $25,000? Is that even possible? Mm-hmm. So that's something that we can start to discuss. But in the big picture, we're about to flash one of the best buying opportunities in potentially the next 4 years. Is going to happen here, I believe, in the next few weeks. We're going to have the best buying opportunity of the next 4 years, hands down, because we're in this super cycle. It's not going to last much longer, in my estimation. I know a lot of people think it's going to last into 2022 and beyond, but the charts are not saying that at the moment. We can reevaluate in a few months, but right now, I believe that we are about to enter our true parabolic super cycle after a nice, healthy pullback. So what's happening now is very healthy.
Okay, so a couple things I heard you say. So the first thing is I completely agree with the news. The news is not something we cover on our channel either. And one of the reasons is because it is very distracting. It can calls for more, emotional decisions. And the other thing is, as I've navigated these markets, I find that in bear markets, people just don't seem to care about good news, and in bull markets, people just don't seem to care as much about bad news. So it makes it so that it's not so useful, and I feel like everything is reflected in the charts. Anyways, now in terms of these, the moves above the red line and the orange line, I think it's very interesting. How do you distinguish between, say, um, uh, like, say, the 2019 move where we went from 3100 to 14K? How would you say distinguish between that one and then the one we're currently in? Is it because the one we're currently in has extended well past the red line, or how would you say distinguish between these sort of, what I kind of call them? I typically call them like short-term bubbles, if you will, something that is not necessarily the run up to the final top, but it could be, right? It could be. So how would you say you navigate, trying to figure out, okay, is this a one of these bubbles that'll ultimately take us back down to, say, the 21-week EMA or the 20-week SMA, whichever you prefer, or are we ultimately going to just accelerate to the final peak, and then cool off for a while?
I think it's a great question. And I think it comes down to just understanding market cycles. So if we look, we said, okay, we topped out at around 20K, right? And then we over a period of time, we crashed all the way down to 3,000. And we had just an absurd move from this $3,000 area to 14. Mm-hmm. And we were cautioning people up here at the top, and we got a lot of hate for it, but it was simply because it was too early. It was really early in the cycle. We hadn't built any market structure. And if you want to recover from a bear market, you have to build really strong market structure. And then over the coming months to years, we started building some really strong market structure so that we could have a move forward, but it just wasn't healthy. Right. This to start a run like this would not be sustainable over time, and a bull market needs to last for a solid amount of time. So I know it's exciting. Everybody was excited during this time, but usually when everyone's super excited, it's time to run the other way. So right. I think it just comes with understanding the cycle. And we can see that we ran, and this was a little bit of a parabolic move where we ran all the way up to the red line right out of the bottom of the bear market. It's almost really similar in the fact that, we're looking at 293 days, right? From our absolute bottom to this run up. And it was probably a little bit similar here where it's 200 days, right? So we can say, okay, we had that kind of parabolic run where everybody got super excited, and then we kind of cooled off and we built some beautiful market structure, and then we went into our true bull run. So I think it just comes down to market structure.
Okay. Another question I have: if you can you go back one market cycle, back to the one cycle before? So this is a good example of the pi cycle indicator actually identifying not one but two tops in a cycle. I'm not sure. Would you consider this to be a double top cycle, or would you say that this was two separate cycles? These two major peaks here.
I think we can consider them two separate cycles.
Okay.
Because I think in the early days with Bitcoin, there was just really hyper growth, and we almost needed these two kind of separate small cycles. This isn't a true bear market, but it took a good chunk of time to really recover from that and look at the structure that we had to build. And that was needed because we just grew too quickly. It was just... Right. It was not sustainable. So these are starting to be more traditional cycles, more long-term cycles, but we're still really short. In 5 to 10 years from now, these cycles will be a lot longer, a lot more mature, more methodical, less volatility. I know everybody wants to think it's more volatile as we have more money in the market, but it'll actually do the opposite. It'll cool things off a little bit.
Yeah, and actually that's something we've showed on our channel. We've looked at annualized volatility, and people think that Bitcoin is so volatile today, but in fact, 10 years ago it would make it seem like today's prices are almost sitting still compared to some of the volatility that we saw even like 6 or 7 years ago. The 2013 peak. So that is very interesting, and it is really interesting too that the pi cycle indicator here, where we had a double peak, it was fairly accurate in trying and identifying within a few days where that peak was. So it allows people to theoretically take advantage of both moves rather than just sitting through one entire one, watching it come crashing down like 60% or something, to then go on another move. And actually, one interesting thing about that cycle. So on our channel we do we call it the Bitcoin bull market support. Basically, it's just a combination of the 20-week SMA and the 21-week EMA. As you've showed on your channel, this is our 21-week EMA or 20-week SMA is a it can be a support area in a bull market. But actually, the double peak cycle that we just looked at, it broke that. It broke down below that bull market support. So for a few weeks, we in fact were below, and not by that indicator, technically not in a bull market anymore. Which then ultimately
But
we
never
got back
closed
up.
below.
Yeah, yeah. Ultimately, we got back above it and went on to put in a second peak within the same calendar year. Uh, but yeah, it looks like the pi cycle from the market cycle before was able to fairly accurately uh, show the peak was in.
Yeah, and I think when we get to potentially a peak, one thing I would like to point out is it's not an easy thing to do to
Hmm.
call the top. And I think we'll all be fairly wrong about it, to be quite frank. It's really difficult. And I think if you're new to crypto, you think, oh my God, I'm going to come on YouTube and, these guys are super smart. They're definitely going to call the top. It'll be, maybe 1% of people, 2% will be able to do it. And I don't know if we'll be able to do it. It'll be very tough. And I do want to make that known because a lot of people just think, you know what, I'm going to buy and I'm going to sell right at the top.
Right.
And if you have that mindset that I need to buy right at the bottom and sell right at the top, I think that's a false mindset to have. If you want to be a trader, you want to buy when you can maximize your money and maximize your return with a risk and reward ratio, looking at market structure, looking at uh, a couple things that you deem important instead of trying to, I'm going to buy now, I'm going to sell right at the top. And that's the mindset that you'll be caught with your pants down.
It's true, and the risk is something I've heard you talk about a lot on your channel. We talk about it a lot on our channel, and we try to say, it's not necessarily about the return. A lot of people will measure prior cycles and say, oh, well, if I had bought at the bottom and sold at the top for Bitcoin, I would have made 100x. But in reality, there's probably not a single person in the world that bought at the bottom and then also sold at the top. So it kind of clouds what's really possible with what may be theoretically possible. And so it's a great concept that for me it's not about the return, it's about your risk adjusted return. And one of the things we talk about too, which in terms of entering the market and exiting the market when it makes sense based on your own risk tolerance. And so in the same way that we can enter the market, like everyone likes to DCA into the market, right? That's fairly common. But in the same manner, when the market gets really overheated or is coming near, say, for instance, the pi cycle top, one option is to DCA out of the market. According to whatever your own risk tolerance is, and it's the beauty is we have to admit that we simply do not know where the top is. We do not know where the bottom is, but we can look at the grand market cycle and see that when we're down here, this is and flirting with a 200-week moving average and trying to put in, and we're in the pits of the bear market. those are historically buying opportunities. And so it's coming in with the right mindset, realizing it's not something that we can just, flip in a day, but it's how do you take advantage of the entire market cycle?
Yeah, it's a great point. I think there's one word that gets in the way of your true success in trading, and that's emotion.
Mm-hmm.
Emotion is a money killer, time and time again. And when we reach a top, there will be so much exuberance. There will be so much excitement that everyone will be screaming, "We're going to go a lot higher," and that's when the market cycle will end, and we'll start a new, fresh cycle. So
Yeah.
just be cautious, and just be wise, and use probabilities, and don't try to time the market.
Right. Yeah, no, it's true. And I remember a lot of people back in 2017 always always pushing the goalpost on what they thought that the top was, because it kept showing them that their prior predictions of what the tops were wrong. And so I think when if you get into this mindset of, okay, saying it has to reach a specific number,
Right.
before you take profits or something, it's dangerous. What's better, as you say, is watch the chart play out. We simply do not know yet, because we actually have to watch what happens over the next few months, and then we can come to better conclusions. But saying something like, I'm going to sell when it gets to X amount, what happens if you pick a number that's $1,000 higher than it actually reaches, and it doesn't reach your number for 7 more years or something? And that's really what's dangerous about coming up with a very specific price target, before the charts really play out.
Yeah, and I would piggyback on that and say, don't get emotionally attached to your ego and what you want to happen. That's something that I learned the hard way. I got into trading when I was a teenager, and my ego just told me I knew what I was doing and I understood the charts, and that took me literally years to figure out. And now it's kind of my mission to help people not make all those ridiculous mistakes that I made for years, is getting emotionally attached to what you want the market to do. So if you want the market to go up, you're going to be emotionally attached to every signal in the chart to quantify your theory that it will go up. And you're emotionally attached to that. And then if it goes down, you usually panic sell, because you say, oh, it's going down, I'm going to sell and I'll buy back when it goes lower, which is not a strategy. That's gambling. So if I could leave one impact with you today, it would be, don't let your ego get in the way, and don't use emotion to make any decisions in trading. If you get into the market with any trade, have everything planned out before you buy. You know exactly what triggers are going to cause you to sell, because you got a detailed strategy. You know exactly where your stop loss is. You know exactly where that market structure is that you're looking for. You know exactly what you are looking to happen inside the trade, and it's all written down. So you can't screw it up. You enter the market, you have everything written down, and you're just reacting to your rules.
Right.
And you have to be very disciplined, and then you'll have a lot more success. So if
Right.
I can leave you with just one tidbit of information, it would be that, to try to use a structure like that going forward.
And that's exactly one of the reasons why, what drew me to your channel, back in when I was, in graduate school, before I had my own channel, was, there's a better way, right? There's a better way to navigate these markets than just blindly buying and selling based on immediate price action, hourly wicks, that sort of thing. There's ways to systematically navigate the market that increase your odds of success a lot. And so if you guys, whoever, my subscribers, if you're watching this video, I would actually encourage you right now to pause this video and go over to Steve's channel and subscribe. And at Crypto Crew University, if you type that into your YouTube, search, you'll find him. He's got a lot of great content. Again, he's the guy that ultimately inspired me to start my own YouTube channel. And so it's this idea of, we all have these different models we can use and to navigate the market cycle. And I think having more models to look at is certainly not a bad thing if it can help you come to your own conclusions and help you figure out a plan, that works for you, right? Everyone has their own goals, and so it's important to come to a strategy that works for you.
Thank you for the kind words, Ben. I appreciate that.
Yeah.
It's an honor to be here. And what I would hope is that we inspire somebody today, Ben, to start the YouTube channel. Because maybe somebody's listening and they're like, well, I feel like it's too late. I should have started my channel when price was back here. I really wanted to start it when price was here, but I just didn't have the time. And now this happened. It's too late.
Right.
It's not too late.
Yeah.
It's not too late. If
It's
this
not,
is
yeah.
what you really want to do, go chase it. Go chase that dream.
In 2019 when I started my channel, it sort of felt like it was too late because I missed out on the 2016, 2017 market. And then the more I thought about it, I was like, well, by the time 2021 gets here, 2022, 2019 is going to feel like a long time ago. And so, if someone's looking to start a channel today, it might feel that way, but think about 3 years from now. There's going to be more and more people coming into the space, and it doesn't take that long for it to no longer feel too late once you get going. And that actually applies to to more than just crypto, right? I mean, it could apply to any business endeavor, right? It's really never too late.
Never too late.
Never too late. Yeah. Well, yeah, Steve. So thank you for showing us the pi cycle indicator and for giving us some words of wisdom on how to navigate these markets.
Should we go to a different chart?
Yeah, I think let's go to a different chart now. And if you wanna discuss some this other indicator or whatever it is, you have the floor.
Okay, so this one's pretty interesting as well, and it's really based off the discussions we just had, right? Market tops, market cycles. So this one is very unique in that it takes these parabolic moves to the upside, and we can navigate it with this new red line, right? This one's called the Bitcoin Investor Tool, right? So we have this green line at the bottom that represents what we would call the golden zone, right? Anytime that we're below this green line, it's usually when there's the most blood in the streets, there's the most fear. Everyone predicts we're going substantially lower, and we just never go substantially lower. These are historically, some of the best buying opportunities you'll ever have in Bitcoin. Whenever we're below this green line, if you wake up 2 years from now, 2.5 years from now, and we're below this green line, it's time to take action. And when we're above this red line, it's time to be a little bit fearful, because that's when we have our blow off top, where we have just an absolute parabolic literally last move, and then we crash down. Keep in mind that anytime we cross above this red line, we make our all-time high very shortly after that, and we don't continue our trend. We break down through, and we continue to break down through for the next few years. So just looking at these past cycles, which we pointed out here, when we broke through, it was very soon after that we made an all-time high, but we're just not there yet. And we believe that we're in this fractal pattern. And if you look at the first time we approached this red line, what happened? It was in this cycle here that we believe we're here. And we just approached it for the first time, and we got rejected down. So it's very similar action, and you start to see the curvature of this red line where we were climbing. And keep in mind, this is our 20K top. It took us a long time to start going down in this cycle, and then we just started to curve back up. And it's very similar to what you saw here. We had our top back here in December 2013, and we continued to rise in this red line until we completed our low. And then we saw some curvature to the downside, and then we saw the curvature back up. So it's very interesting to see where we are in the cycle and what possibly is coming. And then in the middle here, we have the 21 EMA, which Historically, we've fallen down to that many times during a bull cycle, but not every time. You can see that this 29% drop here, we didn't get close to the 21 EMA. So if you're looking at only the 21 EMA and you're like, I am going to buy when we get to the 21 EMA, it's highly probable you won't, because you can see these wicks here. These are bought up very quick. And by the way, a lot of the exchanges will be shut down when we get to here, because there's just going to be so many humans trying to buy Bitcoin. It'll be very short-lived. It's very quick. You can see these wicks are you don't want to play with these. So if you're going to buy several percent, 7-8% above here and try to fill your order. But it's just a broad scope. What we try to do on our channel is provide a big picture, which keeps everybody level-headed, keeps everybody calm, and gives them a couple tools and resources so they can use at home, that when they're feeling that emotion, oh my God, Bitcoin is crashing, you come back to a big picture chart like this and you say, oh, okay, now I can see potentially where we are and what could happen next. And you take a deep breath and you can sleep well at night.
Yeah, I mean, it's a great point. It's we've looked at we looked at the 20-week SMA and the 21-week EMA a lot, and we've seen that is where historically we find support, but a lot of them are wicks down. You might only be there for a few days. This of course assumes that we hold it, but that's why one of the things in terms of having a strategy, it means knowing what you're going to do before it actually happens, because when the time comes, it could be really hard to get into the exchanges, as you said, and actually, as a lot of people have experienced over the last few weeks, that time that you absolutely feel like you have to get into the exchange is oftentimes when you can't, and so having a strategy ahead of time, this is another example of how it can work out. And earlier we were talking about having a strategy in terms of, like if it's going above the pi cycle top indicator, right? Having a strategy, being cautious in the market. And this could be the opposite, right? It could be like a strategy to maybe increase your exposure to the market. If in fact Bitcoin decides to grace us with a drop back down to those levels. But as we've said, and as we say on the channel, short-term price movements are very hard to predict. Very hard to predict, like hourly time frames, daily time frames, so hard to predict. A random walk, geometric Brownian motion, that's what it's more akin to. Not something that we definitively know exactly what's going to happen at any hour of the day. And I think your approach follows with that same idea. Is that we look at these indicators, and it's hard to know exactly what will happen, but we can look at the entire market structure as a whole to get an idea as to where we are within a market cycle.
Absolutely. It's all about staying level-headed. Mm-hmm. Emotion is a money killer. Yeah. And the more you understand a couple, you want to start building your skill sets. You want to start to understand how these things are put together. You want to understand some fundamentals like support and resistance. And once you start to build some tools in your toolkit, so much more will make sense. And you'll start to see things a little bit cleaner, and that'll help with your emotion. And if you think about your emotion, I'll ask you this to everyone watching. Think about the last time you really, really, really wanted to buy Bitcoin. It was probably at a time when you should have been selling. And then think about a time when you really, really wanted to sell Bitcoin. You had your finger on the trigger to sell. It was probably at a time when you should have been buying. And that's just, it's tough because that's emotion. And for hundreds of years, humans have tried to master this game. And it really just boils down to controlling emotion more than a strategy. You could hand somebody the best strategy in the world and have the most successful strategy. But if you can't control emotion, you won't follow the strategy because it's going to feel so wrong, because you should be buying when you want to sell. And then when you want to buy, you should be selling. So it's tough. It comes down to emotion.
Yeah, you have to sort of go against the herd, right? If you're doing what everyone else thinks is going to happen, that tends to not work out so well. Oftentimes, it's kind of like back in March of 2020 when the market was dropping relatively quickly, and a lot of the indicators were screaming that it was a huge buying opportunity. But then when you live through it, I distinctly remember there's so many people that kept calling for lower prices and lower prices, like a $1,200 Bitcoin, that type of, that sort of thing. And it's like that stuff is, you just have to tune that kind of stuff out. Because these opportunities, when they present themselves, they're often very short lived, like extremely short lived, especially the one in March. And that capitulation, I've thought was probably more important than the one we had, a year before back in 2018, because I mean that capitulation took everyone by, I mean most people by surprise. At least the degree to which it happened. I mean, we woke up and our portfolios were, I mean, the prices of Bitcoin were down 60% or something, and so these are the opportunities that are historically the ones to take advantage of. And one of the reasons why it's so useful is because, buying Bitcoin at those levels, you're already up 10x, right? You're already up 10x from the top that Bitcoin put in, obviously slightly less now. And so you have such more of a huge advantage than the people, waiting and waiting later on to, for various types of, later market cycle confirmations and that sort of stuff. So it certainly makes it easier to stomach 20 to 30% drops later on if you were the one getting in when it was the opportunity of a lifetime, right?
Absolutely. Yeah, I think you nailed it.
So do you have any more indicators that you would like to show us?
I definitely want to show this one, and
Okay.
maybe this one's it, or maybe we show one more after this one.
Okay.
But this one is super simple, and what we try to do is keep it super simple, clean, and easy to understand. And we've got the RSI at the bottom, right? Overbought, oversold, and this is on the weekly time frame, right? So we've got the whole history of Bitcoin here, and we know that, by the way, this top level is the 90, right? So anytime we're above the 90, it's incredibly rare territory. It's only happened 6 times in Bitcoin's 10-year history. So 6 times we've been above this 90 level. And it means that everybody is buying at these tops. Everybody. It's overbought, right? And we know that in these 6 times that we've been above here, 3 of them were for only 1 week, right? We got above and it was 1 week and we came crashing down. And the other 3, we were above for a few weeks and as much as 8. But each time the market reacted the same. So each of the 6 times we've fallen from the 90 level all the way down to roughly the 55 level. That was thing number one. The second thing it has in common is each of these 6 times, we also fell to the 21 weekly EMA.
Right.
And we know that this is interesting because we just crossed down through the 90. We spent 2 weeks above it, right? So we crossed back down through, and everyone's wondering, well, what's going to happen next? And we can't say with certainty, but we can say with a probability that we're going to fall all the way down to this 56, 54, 55, 56 level of the weekly RSI. A second thing that's pretty fascinating is we have these market cycles, right? We have this market cycle, we have this market cycle, we have this market cycle. And so far, they've all reacted the same way, where our first peak above the 90 was our false peak. And we had our true peak roughly 200 days later was our second true peak. And that was our market top. And it happened again in the second market cycle, right? From 2013 into the end of 2013, into 2014, we had our first peak above the 90 being our false top, and the true top came roughly 200 days later. And then we fast forward to the market cycle that you probably are all familiar with. Again, we had our first peak back here in June 2017, which, by the way, this is that fractal pattern that we've been pointing out that we believe we are potentially in. And it really mirrors where we're at now as we just peeked our head through. But again, roughly 200 days later, that's when the market cycle really, really took its form. So we can say that it's not for certain, but we can say that based on these facts that we just covered, potentially 200 days from now is when we'll reach our true market top. But first, we probably need to revisit these kind of levels here on the weekly, which seems like light years away. But we'll see how it plays out over the next handful of weeks.
That's an interesting, because a lot of people in the crypto space, are thinking about December of 2021. I don't really think I don't really put too much credence on a specific month just because it has peaked in that month in previous cycles. Obviously, it peaked in December in 2013 and 2017, but as you show here in 2011, the peak actually came in the summer. So that could ultimately be, if this cycle does continue to move like this. And rapidly put in a cycle top within 200 days, well, that would actually come several months before a lot of people might think it would come. So that is something that would certainly be something for people to consider, is that it doesn't necessarily have to play out like we want it to or like we think it might, but it could play out in a different way. And of course, on my channel, we talk about some other possibilities. As well, but it is interesting that this one actually shows that if it comes, say, approximately 200 days, give or take, it would actually be before December.
Yeah, and to your point, Ben, I don't think we can put plug it in your calendar 200 days from now.
Right.
I'm selling every piece of Bitcoin I have, because it could be 100 days, and I think to be a disciplined trader, you have to react to the charts. You can't react to the news. You can't react to what your ego is saying. You have to react just to the facts and the charts. And it could be 100 days from now, or we don't come above this 90 level, but we show other signs that hey, it's time to be more cautious. So react to the chart. Don't react to anything else.
Right. Actually, that's something we say a lot is it's not necessarily what happens. It's, do you react to it, right? Do you react to what happens? If Bitcoin goes up, however much, and you don't react in any way, well, does it make a difference, right? And so I would agree. It's about how we react to things that happen in the cycle. Obviously, we all have our thoughts about what will happen, or our desires for what will happen, but we also need to remain pragmatic in the sense that no one actually knows exactly what will happen, and we have to respond in a manner that gives us some flexibility.
So I would like to show you a chart which says it has a very interesting theory, okay, and it contradicts some of the things that we covered so far. So it may be interesting to provide a different context. So this is the Golden Ratio Multiplier. Have you ever shown this before?
We have not. No, none of the only thing that you've presented, I think, so far that we've showed on our channel, we have talked about the RSI sum, and then we've talked about the 21-week EMA sum, but the Pi cycle top we've not talked about. Not talked about the Golden Ratio either.
Okay, so this one's very interesting. So it essentially, it's got some Fibonacci levels here, right? And we've got some colors, right, from red all the way up to yellow. And before we get into the specifics, I just want to cover the big picture. So using this, right, it basically says, hey, this first cycle that we had here topped at the yellow line. And the theory is each cycle after that will top at the lower line, right? The lower Fibonacci level each way through, because the cycles are getting weaker and weaker with less volatility as we proceed. So the theory is, look, you topped at this cycle in 2013 at the yellow line. The next one should top at the orange line, which it did. You know, we went above it slightly, although it did top at the orange line. And then the next cycle, according to this theory, should top at the blue line. So if we fast forward to the 20K top, you know, we went slightly above it, but it did more or less top at the blue line. Now, what's very interesting is that using this theory, our next cycle top should be at the purple line, right?
Right.
Because we've gone down each way as our look at where we are now.
Right.
We've just peaked above the purple line. And a question that nobody's asking is like, could this legitimately be our top?
Right.
And we can't completely take it out of the cards, but we have to analyze it.
Right, and this is something we've spoken about on our on the channel as well. Is not necessarily that it is the market cycle top, although it could be for sure. But that it could be that it in the same manner, it could be that in the same way that things got heated in 2019 too early. It could just be that things got heated a little bit too early, and we need to come back down and cool off for a while before we can continue back on up. There's actually an indicator that we talked, a couple indicators on the channel that were screaming at us that things were getting very overheated. We have like a risk metric on the channel, and it was at 0.9, and it only goes from 0 to 1, and it reached 0.9 at 42K. And that's one of the examples of, you know, but then again, if you go back to the 2013, the double peak in 2013, we had a move where it went up to the upper risk band, it came back down, and then ultimately went on later to go back to the same risk band, you know, later that year. So this is a great example of everyone looking at various models and considering the implications of each, and realizing, as we've stated, that no single model will tell you the whole picture, right? No single model will tell you the whole picture, but by looking at a lot of different models, we can come to better conclusions that match the risks that we are willing to take, right? Certainly buying Bitcoin at 42K when it was up 4x in 3 months carried a lot more risk than, you know, in November or October. So it's all about looking at these different models, and I think it's really great that you have these different models and you present them so that it truly lets us look at things in many different ways to consider all the different possibilities and to ultimately come to our own conclusions on how we want to navigate the market cycle.
Yeah, I think one last thing to point out about this chart. So we've got this red line and green line, right?
Right.
And over the past handful of years, it's never crossed. But we're crossing as we speak. Like as we speak right now, it's crossing. So if we look left, we say, what evidence in the chart, if any, can suggest that this is important, this cross right here? And if we go back in time, where did this happen before in our previous cycle? It happened right here in that June area. And remember, this is the fractal pattern that we believe we're in, which we topped out at around the purple line. And at the time that we crossed is really when that symmetrical triangle / pennant broke to the downside. So it's quite interesting to look at it from that angle as well, to say, hey, maybe Bitcoin, this move here could be a little bit stronger than its past moves. This purple line potentially is not going to be the line that suggests our top. Maybe it is the blue, based on our past cycle. Maybe Bitcoin is forming a new road now and not following patterns that it's done for 6 or 7 years. But it's interesting to look when you've got an array of data in front of you, to try to look for fractal patterns and try to make sense of, okay, this crossed here. When did it do it before? Was it important? Why did it do it? What happened after that? And then you can start to make sense of where we are now in a move and what potentially could happen. And then once you create a theory, as Ben said, you don't want to just use that theory. You want to test that theory with some other charts that look at it from different angles, and then you can poke holes in your theory or make a new theory. So then you'll start to see things a little bit clearer than you would otherwise.
Right. Yeah, I think this is a really important point to, as you say, look left, right? What has it done in the past? And that's what we say as well is it doesn't mean that things have to repeat in the exact same way, but at least we can look to see what happened and use that to inform our decisions, whether that means you want to take the stance that it will happen again, or if you think it will actually happen in the reverse way. But at least by having the data and knowing what the data says, at least you can come to somewhat of a more informed opinion rather than just being completely in the dark on what has happened in the past.
Absolutely.
Yeah, I think the indicators that you presented here are very interesting, and I would encourage everyone who's watching this to again go over to Steve's channel, Crypto Crew University. You can check out his website, cryptocrewuniversity.com. He covers a lot of stuff, a lot of indicators, different types of analysis that we don't cover on this channel. So if you're looking for a different perspective on the market, different interpretations of data, but ultimately it always comes down to the data, then Steve is another person that I think is worth listening to as we navigate cryptocurrency, Bitcoin, and also some of the other major cryptocurrencies. So I mean, Steve, it's an honor. It was an honor having you on today. I'm glad that you were able to come on and present some of your own analysis with my viewers, and hopefully it's able to encourage someone to come up with a different strategy to navigate these markets rather than relying on emotions. And as you said, if they want to start their own thing, again, it's the moral of the story, as I've shown creating my own channel after being inspired by you, is that it's never too late.
Absolutely. I hope we inspired somebody today. I feel like we did, and it was an honor to be on the show, Ben. I look forward to having you on our show. I think that you bring a very unique perspective, and I think that although we cover different things, I think we have the same outlook on the market, where I think you try to look at the bigger picture, and keep everybody level-headed, keep everybody calm, and not looking at the hour to hour, the moment to moment. And I think that's important. I think that a lot of people need to hear those types of things, and you take that big picture approach through a different lens, which I think is phenomenal. So I'm excited to come on your show, and I'm excited to have you on our show as well.
Yeah, and I look forward to it, and I'm more than happy to have collaborations in the future. We can maybe check in from time to time, maybe in a month or two, and look to see where we are and go through some of the indicators and see what does the data say. What has transpired since the last time we looked at this stuff. Has it continued on the path on the path that we would want to see towards putting in, say, a theoretical market cycle top, or has it come back down and we're the game has changed a little bit? Again, it's always how you react to what happens, and because of that, I think it's important for us to revisit these things occasionally. But at the very least, everyone, if you guys like the content, make sure you subscribe here. After you subscribe, go over to Steve's channel, subscribe to him. He's got a ton of useful content himself, and I think we'll wrap it up there. We will see you guys next time. Bye.